Hello everyone, this is Mark Anderson, Home Loan Officer with Carrollton Bank in St. Louis, Missouri, presenting episode 4 of my series, The 5-Minute Mortgage Class, where I teach people how to save money on their mortgage and about all the various options that are out there. Today's episode is How Your Credit Score Affects Your Mortgage. All right up front, let's talk about the range of credit scores that are out there and about the 3 different providers where we obtain those credit scores. The 3 main credit agencies, Experian, TransUnion, and Equifax, you'll see here have their own set of score ranges. So Experian 320 to 844, TransUnion 309 to 839, Equifax 334 to 818. One of the things you should be aware of is if you as a consumer go out and buy your credit score from one of these agencies, I find this particularly frustrating that a lot of times the score that you buy is not actually on the same range that anybody in the lending industry actually uses. So if you see a score range that goes up to 950, for instance, you just have to know that that score at the end of the day isn't really going to tell you a whole lot because it's hard to convert that into the actual score range that we use in the industry. So why do we pull from 3 different agencies and how does that all work? So the reason we pull from all 3 of these is different people that you obtain credit with report credit to maybe only one of these, and so it's important that we get as broad of a picture of your credit history as possible. What we'll do is we'll look at the Experian score. Let's say it comes in at 750. The TransUnion score, maybe it comes in at 711, and the Equifax score might come in at 689. What we're going to do is the score that ends up in the middle of the distribution, in this case 711, is the score that we're going to use for loan purposes. All right, next up, how does your credit score affect the loan options that are out there? Well, conventional financing is going to require typically a minimum credit score of 620. You'll get the best available options with conventional if you have a 680 plus. That's going to be the range at which the conventional loan option almost is always going to be better for you than any of the other loan options that are out there. Conventional interest rates, as we're going to see, are very credit score sensitive. So we're going to break that down here in a moment. The government loan programs, FHA, VA, and USDA, are much less credit sensitive, meaning that you're going to typically get the same rate whether or not you have a 620, 680, a 740. Kind of in exchange for that, these options, if you have higher credit scores, you could probably qualify for better options with conventional financing, but these programs are much more flexible when it comes to your credit scores. FHA technically doesn't have a minimum credit score, but in practice I've found that you want to make sure that you've got at least a 580. VA is a little bit more sensitive. You want to typically make sure that you've got a 600 plus, and same goes for USDA as well. There are exceptions to that, but that gives you a basic idea. All right, so on a conventional loan, how does your actual score impact your rate? Well, like I said, it's very credit score sensitive. The best rates are going to be available for those with a 740 or higher credit score. And I've gone ahead and calculated a scenario based on a $300,000 purchase price with 5% down. Now the rates included here are just for illustrative purposes only. They're not meant to be an exact quote for a particular borrower. So on a 30-year fixed mortgage, if you have a 740, that's going to get you an interest rate of 4.25%. Now, if your score ends up being between 720 and 739, the rate would jump up to 4.375%. If you wanted to obtain the same rate that you would have at 740, you would pay discount points. And in this case, I'm going to tell you dollar for dollar. Based on today's pricing, it would cost $712 to grab that 4.25 rate with the score between 720 and 739. At 700 to 719, you're going to be at an interest rate of 4.5%. If you wanted to grab the 4.25% interest rate, you'd have to pay a whopping $2,494. 680 to 699, that rate still 4.5%, but it's going to cost you even more if you want to obtain the lowest rate available at 4.25. It's going to cost $3,206. 660 to 679 jumps up dramatically to 4.75%. And if you wanted to buy that rate down to the 4.25 available for people with credit scores of 740 or higher, you would have to pay an even larger amount, $6,056. 640 to 659, the rate would jump to 4.875. In order to obtain the 4.25 rate, you would have to pay $7,481. And then finally, at generally the lowest credit score range where you can get approval on a conventional loan, the rate goes all the way up to 5% if your credit score falls in that range. To buy down to that 4.25% rate up here, you'd have to pay a truly monumental amount, $8,906, in order to get that rate. So as you can see, your options are very much dependent on your credit score, and the higher your credit score, the better your options are going to be. But it's not just interest rates that are affected. So I'm only going to talk about one type of private mortgage insurance here, the single premium option. I'll throw up a link to my other video on how to win the private mortgage insurance game so you have an understanding of these various private mortgage insurance options. But it's arguable that your credit score affects your PMI rates even more. The cost you're going to pay for PMI is very, very dependent on your credit score. So in the same $300,000 purchase price with 5% down, with a single premium private mortgage insurance plan that doesn't require you to pay a monthly fee ever in the life of the loan, if you've got a 755 score, you're going to be able to pay a flat sum of $4,987 to cancel out PMI over the life of your loan at closing. To compare this to 682, which is still a decent score, you'd have to pay $9,462. Now, the other types of private mortgage insurance, monthly premium and the lender paid options, are affected basically just as dramatically. And again, the higher your score, the better the terms. So if you have any questions about how your particular credit score affects your mortgage, or even if you're interested in learning how to boost your scores to qualify for the best deal, shoot me a call or a text at this number. Thank you very much for watching.